Good morning, everyone. I am so excited to be back here at the second Solution Summit. I was here last year talking about housing, my favorite topic. And I'm really excited to delve deeper this year, especially with some of that research that we just heard. So maybe we'll kick off there. We just heard from Andre that housing was actually a meaningful part of the progress we've seen over the last few years. So just to set the table, I'll ask all three of you just to react to that. What other conclusions do you take from that housing being a part of that racial wealth gap narrowing? And I'll start with you, Michael.
Yeah, certainly. So first, let me thank all of the sponsors for what I think is a terrific event, what will be a dynamic event. I am already energized, which is tough for me to do at 9:30 in the morning, but after listening to my good colleague, Andre Perry, I think I'm ready to go out and make change. But let me say, certainly we've seen evidence that home ownership and home values in particular have played a very important role in contributing to closing the black-white racial wealth gap to a small degree. And Andre, you've already commented on that, and I think those were excellent comments and quite spot on. Let me point out a few things. First, certainly the degree to which we observe that with respect to home values, one of the things that we've seen in particular is that on the one hand, it's a good thing the degree to which we're able to build wealth. The degree, when you look over a longer cycle, the degree to which black-owned properties tend to be more volatile, then sometimes what we will see is certainly there's explosion during good times, but then a significant decrease when house prices begin to soften. Something that, in fact, we're actually been observing over the last few months. And let me say one other thing here, and that is there's also evidence to suggest that lending, particularly to black applicants, tends to happen toward the end of the economic cycle. And so the degree to which that is what we're observing, then once we see those collateral values beginning to soften, it does suggest that black homeowners who are already vulnerable because of the history of structural racism, Andre, as you've already talked about, may put them in a situation where they're less resilient in the face of a softening, of some softening that we're seeing right now.
Yeah, I actually felt a little inspired by you, Andre.
Oh, good.
Good. And I say that, I don't mean that he's not generally inspiring, but I do feel like as a practitioner of equity in the housing space, I'm with Freddie Mac, there are often days where I feel in despair, I guess I would say, because progress is slow. And we've done a number of things in recent years that in the housing ecosystem to advance minority home ownership, but progress has been relatively small in terms of the number of black families who've achieved home ownership over the course of this last few years. And the backlash that we are all feeling kind of in the political and in the spaces in which we operate, the backlash from, I assume this role shortly in the period of time after the murder of George Floyd, and everybody was really charged up in institutions, philanthropy. Institutions were very committed to their contributions and their commitments to the space. And a lot of that has kind of dissipated, and the pendulum is swinging back, and race-conscious programs and products are in disfavor now, whereas many of us thought the stars were aligned a few years ago and we were really going to do some amazing and big, bold things. And I think that we've done a lot of things. We've tackled a lot of low-hanging fruit in terms of inefficiencies in the system, obvious barriers to minority home ownership that did not need to exist, that were built under the guise of risk. When in many cases, we didn't even have any data demonstrating that this risk existed, but it was like the boogeyman of what we can't do because those borrowers would not be successful in sustaining their mortgages. So I hear what you're saying in terms of a softening market and Black and brown folks doing less well when the market softens, but the reality is there's never an ideal time to put more families of color into home ownership. Right. So the time is now. The time is as soon as we can get those families ready for first-time home ownership, and that's education and trust and mindset and products and offerings that make it possible for them to do so. And we've learned a lot through special purpose credit programs as an industry. And for any of you who are not in the know, those are programs that are permitted by federal law. You can create a program on different terms to benefit underserved populations. And so the way that that's been interpreted by the financial services industry, the way that's been interpreted in mortgage lending by and large is place-based solutions. So offering mortgage offerings in a majority minority census tract on terms more favorable than are otherwise available. And they've been great. They've been expensive. I think they're here to stay. But there are a small part of the solution, and there are challenges. I, for one, when we're talking about place-based, and I don't want to go on for too long, but I had so many thoughts when you were talking. When we're talking about place-based solutions, one of the challenges that keeps me awake at night at times is about the impact of climate and shifting climate, and the fact that we as a people live on the lowest quality land, and many of our communities are not going to fare well in 20, 30 years. And we have the data already to show that our communities are not resilient to climate because we're on this land separated by freeways, what have you. And so I think, as a person whose job it is to advance racial equity and advance Black home ownership, the last thing I want to do is put Black people in homes that aren't going to be there 30 years from now. I want to put families of color into home ownership in resilient homes in neighborhoods that can withstand the climate change that we know is coming. So I'll pause there. Yeah. Sorry to go on for too long.
No, that was amazing. And just because this is the Solution Summit and this is what we're here for, I do think it's a good moment to put in a good plug, especially, Andre, given everything you said about how public policy and subsidy can really advance Black Americans. Part of the Inflation Reduction Act was $27 billion called the Greenhouse Gas Reduction Fund that was all allocated basically a couple weeks ago, that is very specifically focused on climate change and has a very specific requirement that a very meaningful portion of the money must be invested in Black and brown communities. So we should all just watch that space and make sure that we take advantage of that capital. So Pam, I'm actually going to stay with you for just a little bit more because you talked about it a little bit, but I just want to make sure it's clear for everyone. Can you just give 15 seconds on your role at Freddie Mac, which I think in and of itself is pretty significant progress as arguably the most kind of powerful person in federal government specifically focused on the Black home ownership rate?
Thank you. She's very generous in her description of my place and my role. But I am the Vice President of Equitable Housing at Freddie Mac, and my job is setting the strategic course for Freddie Mac in terms of advancing racial equity. So advancing access to credit and removing barriers to home ownership for families of color. When I was placed in this role, I'm a lawyer by training, and I led fair lending at Freddie Mac for a decade before I moved over to the business side to lead this strategy. And, they're very closely related, fair lending and what we're doing now, what I'm doing now, which is affirmatively furthering fair housing. In my role in fair lending, I was trying to keep the company on the right side of the law in terms of the decisions we made that negatively impacted minority families, and now I'm on the other side of that's not enough to just do no harm. Let's do more than do no harm. Let's actually look for opportunities to advance wealth through homeownership for minority families. And so I have the privilege of leading that function at Freddie Mac, and it's been quite the journey over the course of the last 3.5 years. And to be very clear, my work is not alone. Freddie Mac and Fannie Mae, we set the standards for the primary market. We set the lending standards that banks follow in terms of how they underwrite mortgages. And so we are setting standards, setting scale, creating liquidity for the primary market financial services sector to make more mortgage loans and hopefully make them on a more equitable basis than has historically been the case. And there's a lot there, but I'll pause.
Yeah, fantastic. So obviously touching on sort of these two sides of the coin, for more Black Americans to benefit from some of that value increase that we've seen over the last 2 years, we need to get more Black Americans into home ownership. So I'm glad we've touched on that. Maybe to go back to sort of the other side of the coin, when Black homeowners do have homes, the volatility that you touched on. Andre, in the last panel, you started to talk about devaluation and kind of the work that's been done around appraisal issues and bias. I want to go just a little bit deeper on that. It seems like you said we've seen some progress. Would love to hear from you what more we can do there and really just unpack for a bit the issue there.
First, I do want to say there are a number of people here, Nikitra Bailey of the National Fair Housing Alliance, Pam, Perry, others in this space. When we released that report in 2018 around the devaluation of homes in Black neighborhoods, it got a lot of attention, presented on Capitol Hill several times. Biden picked it up, created the Property Appraisal Valuation Equity Task Force. But I say that it was a report in which people acted on. You had community groups, you had advocacy organizations, you had individual homeowners, you had the muckety-mucks at Freddie and Fannie. You had a lot of people coming together to say, hey, we can prove that racism exists.
Yeah.
Right? And we can also figure out strategies to restore the value that's been extracted by racism. And so for me, I'll never, I can talk about, we found 156 billion in lost equity, about 23% per home. And that number is actually higher now. It's about 162 billion in lost equity. And after the National Housing Finance Agency released data, we also found out that Black neighborhoods are twice as likely to receive appraisal lower than the contract price. And this wealth is just being stripped from our communities. But there is action taking place. And there's still work that needs to be done. And I love what the administration started. I'm going to always push for the administration to finish, right? And it is when people are backed into doing the right thing, things happen. And one of the things that happened and I love showing the clip. I wish we could show the clip. But I was on Capitol Hill, and Representative Al Green asked people on the dais to raise their hand if we believe there's discrimination in housing appraising. And he asked me, and I was the only, right? And I was the only one that raised their hand, right? The only one that raised their hand. And I don't say this to shame anyone. Well, maybe a little, just a little. But no one in those positions exists anymore. And that's because people acted. And yeah, we got a long way to go. But if we continue to put the pedal to the metal, we can get more value back. But housing, when it comes to the wealth divide, I actually think it goes without saying, it's one of the, I'd say the easiest, because it's hard to change stock markets. It's hard, I think it's even harder to change labor markets. We have an opportunity to get equity to people. The thing about special purpose credit programs, that are why they're important. Because the way this past discrimination shows up is a lack of a down payment. That's how discrimination shows up. You have hundreds of thousands of invisible prime borrowers, people doing everything right, but because their grandfather, great-grandfather couldn't leverage that GI Bill, because they were redlined, because of all those things, they couldn't pass on the wealth, and therefore they don't have a down payment. And so if we can get people a down payment, or better yet, create products where you don't require a down payment, because we know people are paying rent decades on end, right? In high markets. So if we can create the product, and by the way, for those in the banking industry, that's the market share you want to capture. This is not a 20 the handout or anything, a 2008 situation. These are invisible. These are people who can hold a mortgage. You're going to get more customers in that way. So for me, it's about recognizing that you have value there in people. Because, and I always got to remind, it's not that homes are devalued. It's people that are devalued. And it comes out of the wash in home values. So when we recognize that people are worthy of investment, we'll get them the capital.
I wanted to follow up on what Andre just said in terms of it's people being devalued. We focus so much. So at Freddie Mac, for example, at the GSEs, you know, it is part of our charter that we, our bread and butter is that we're committed to affordable housing. Affordable defined as individuals at 80% of area median income and below. Equity is not about just helping people at 80% of area median income and below. It's very difficult to afford a home if you're at 50% of your area median income. There are millions of people, Black people, who are above 80% AMI, who are not homeowners, who have incomes that would support home ownership. And their most significant challenge is a lack of wealth, a lack of a down payment, a lack of family able to support and provide to them a little leg up to help get into their first-time home. And so the disparities in the home ownership gaps are not just disparities that are about income. They are disparities that are about historic discrimination and disadvantage, historic lack of wealth, and you know, they persist all the way up the income stack.
That's right.
I'm going to turn it back to you, Michael.
Yeah.
One of the things that I love about your work is that you're clearly very passionate about housing, spend a lot of time on it, but you also, you know, emphasize that Black Americans need to have, you know, a sort of a more diversified portfolio outside of just housing equity. Would love for you to touch on that a little bit more and why that's so important.
That's right. And, you know, one of the things that our body of research has really tried to amplify is that in the presence of shock scenarios, the structural racism and the vulnerability that's created by it is amplified. And so what I mean by that is the degree to which you have fewer financial resources, when that hits up against significant job loss, which we know that Black workers are more likely to lose their job. We know that research has shown that more Black workers are more likely to be the first fired. Then we do have higher unemployment rates for Black workers right at the time that they're going to need both the capital in order to sustain themselves, and at the time in which the financial system has begun to make it harder to actually access that capital. And so what the research then kind of starts to then think about is, you know, the degree to which public policy has done things like institutional forbearance, foreclosure moratoriums that have been resoundingly successful. Granted, we did see house prices largely rising, so there's that, but have been largely successful in ensuring that when Black people face those types of catastrophes, that there is public policy in place to ensure that they're still able to keep their home. And it gets back at this idea of to what degree do these cross-cutting issues of recessions, climate change, AI, how do they impact the history of structural racism that already makes Black people more vulnerable, but also less resilient? And so turning to your question, another way to think about that are ways in which we can allocate away or allocate and expand our resources toward other asset classes. Certainly, one of the things that we've seen over the last 40 to 50 years has been a marked decline in interest rates. Certainly, interest rates have risen more recently in response to higher inflation pressures, but when my grandparents had a home, they had a mortgage rate of 30%. Significantly higher than mortgage rates today. And the reason why I bring that up is because certainly there's a part of the story around racial wealth that's around income, but there's also a lot of growing evidence around the success there. The proportion of Black people that have incomes over $100,000, $200,000, college education. Certainly those gaps haven't closed, but we're seeing progress. But what we are also seeing is that there has been a differentiation in the treatment of capital income. And so the degree to which we've seen this focus on labor income and we've seen the success, that's a very good thing. But the degree to which the world has changed and public policy has supported that change in a way that supports the wealth created through capital income, then that's a key source of these types of racial inequities. So what does that mean? That suggests that there should be opportunities to start to diversify into some of those other asset classes that allow Black people to build the wealth and take advantage of those of some of the treatment related to those classes.
And can I just add on this, because another solution that we have to think about and push for is automatic interest rate reduction. So you can clap that up. So when interest rates drop, so should your interest rate, in macro sense, so should your interest rate in your mortgage.
What about the flip side, when interest rates rise?
No, they should, I think they should stay. Right?
I don't know, y'all.
The reason, because this is what happens, and this is one of the innovations I really agreed with and promoted was a change in credit scoring. Because credit scoring also reflects past discrimination. Sure. That there are many that because we did not get that intergenerational wealth transfer, we're more likely to take on debt. And so that credit score reflects that. Doesn't necessarily reflect cleanly our willingness and ability to pay. So for me, it's about if you understand that and you account for that, you should have products that allow for, hey, we entered this home with a higher interest rate. Because during the pandemic, when white families were much more likely to refinance,
Yep.
Yeah.
Black families by and large did not do it at the same rate.
Yeah. And
so you need
spent a lot
some
of time on that issue. Sorry.
Oh yeah. So you need to figure out some ways to have automatic interest rate reduction. So because Black families are very leery of working with banks and refinancing. So we got to figure out ways to deal with it.
So on the refinance space, let me just pick at that a little bit. He's absolutely right that Blacks did not refinance at rates comparable to other racial and ethnic groups, and certainly nowhere near white families. And part of that was an unwillingness of Blacks to trust the system, to go back to the bank to refinance. But part of it was that our home values tend to be lower, and actually we tend to have a lot of equity in our homes. And the loan size is so small that the banks wouldn't give us the time of day, right? They wouldn't give your auntie the time of day to refinance a mortgage that is $75,000 UPB when they have, across town a $750,000 mortgage that they can refinance to a white family. for the same amount of effort. So.
Let me jump in. Let me jump in really quickly because there are two important points here.
And this will be the last
Yes.
comment. We can talk about this all day.
Two things. First of all, this gets at the appraisal bias issue.
Yep.
The degree to which black homes are undervalued, and Andre, you're exactly right. The degree to which commentary on undervaluation is commentary on the very founding of this country. When we start to think about the 3/5 compromise, that is an undervaluation of blacks as human beings, getting exactly what you said. The second point that I want to point out, though, is when we think about interest rate buy downs, it actually works through two channels, at least two channels. The first one is certainly the reduction in affordability. The second one is compounding actually working against you. And so what we observe is that over a 30-year period, if you have a higher interest rate, certainly you're going to get to the same loan amount at the end because we're going to assume that you have, that the loan amount is the same under both interest rate scenarios, higher interest rate, lower interest rate. But that being said, what we see is that you actually pay down less of your interest for the first 20 to 25 years of your loan. Lower principal reduction does again feed to less wealth equity, which then corresponds with the gap in black-white wealth.
Yeah. We're going to have to leave it there, but I know we'll continue this topic next year.